New mortgage stress test rules will soon make it easier to qualify for a loan. Beginning in April, they will change the way the process is calculated. So joining me with more is BNN Bloomberg's John Erlichman. John, great to see you today.
Nice to see you, Ben.
Okay, so what does this mean? How is it going to change the stress test?
Well, for anyone who's gone shopping for a home and for a mortgage over the last couple of years, they probably know their money doesn't go as far because of this new mortgage process, because you have to qualify for a mortgage rate which is actually higher than what the bank is going to charge you. Some people said, hey, not a bad idea because things were getting a little crazy in the housing market. Let's cool things down. But one of the common beefs, Ben, for the industry and for consumers is the math doesn't quite add up to what's actually happening in the industry. Here's what I mean by that. You might have looked online or gone into a bank branch and seen something called the 5-year posted rate by the Bank of Canada, which is not the rate that the banks generally charge you. It's generally a lot higher than that. So the government is now saying, look, we're going to try to figure out a number that is much more in line with what actually happens when you go out to get a rate, and hopefully that gives you a little bit more money to go towards your home purchase. Could be thousands of dollars. For now, it's insured mortgages, which is a different part of the market.
Well, the current stress test had the effect, one of the effects was cooling the market down, slowing things down, keeping prices a little bit lower, making it maybe perhaps a little more accessible. Is this going to ramp things back up?
It's a great question. Certainly, we're getting into the spring buying season, and so to make this change at a time when even in markets like here in the Greater Toronto area, right, we've seen prices moving up again, could escalate some of that housing frenzy again. But I think flexibility is key here as well. I mean, one of the side effects of these stress tests were people felt like they couldn't shop around for a mortgage because they'd have to go through that mortgage stress test process all over again.
That's right, yeah.
I think
it wasn't portable.
You want that choice as a consumer. So you might see more of that. That's a possibility. And then we might see another step to the uninsured market. I mentioned insured mortgages. That's for people who are putting down less than 20%. So that's what this has to do with. But we might see the whole mortgage market move towards this very soon.
So is this a sort of a course correction by the feds saying, you know, we might have overcompensated in one way and we're going to try to find that happy medium?
Yeah, they're being careful in what they say, but clearly the Prime Minister told the Finance Minister, hey, we got to be a little bit more flexible.
All right. Well, thank you so much for this, for everything you guys are doing at BNN Bloomberg. We appreciate it.
Thanks for watching. If you like this, be sure to subscribe here.
And you can check out more Your Morning videos right here.